Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to be digging into solar stocks. This is an industry that I've been digging through here lately and researching, and there's just been a lot of positivity around the industry and in the solar stocks in general, as we're starting to see a pretty strong transition over to renewable energy. You also have the potential of Democrats taking over after the next election, which in theory would boost a lot of green spending, if you will, at the government level. So solar stocks are definitely a hot topic right now. We're going to jump in to see, though, are they overvalued? Should you wait for a price correction if there will be one, or is now the time to get in? Reminder as always that my stock picks and projections are just my opinion for your entertainment. Make sure you do your own due diligence on any investment. And of course, don't forget to subscribe to the 40 Finance channel. I do 3 or 4 videos every week around stock analysis just like this. So be sure to click the subscribe button so you get all of the updates. And if you're interested in signing up for my email list, I have a free PDF, 15-minute stock research guide that I'll send you absolutely free. Lots of great free resources and ideas in there to help you research stocks better. All right, before we jump in with our first stock, let's just set the precedent here of what we're doing today. We're going to evaluate the solar stocks, the top 4 based on market cap, evaluate their PE and their EPS, try to get a feel for where they're trading at today compared to their valuations and where they've traded at in the past. We'll also look ahead to 2021 a little bit and see how those EPSs might project and how that affects the PE. And ultimately, though, at the end of the day, we're trying to answer the question, should you buy any of these stocks today based on their current valuation, or are you better off waiting down the road? Perhaps there's a market correction or a market crash where you might be able to get in at a better price. Okay, first stock on the board today is SolarEdge Technologies. Market cap above 10 billion as of today, price of $289.76. If you look off to the price, you see the current EPS is 334. And you've got a PE today of 86. Down below in the long yellow box, that's the trailing PE, the historical trend of trailing PE. So you kind of look across and get a feel for what have people been paying for those earnings over the past several quarters. Then if you drift up to the top right, we have our growth estimates for this company, and I highlighted next year, next 5 years. You can see we're projecting about a 29% growth rate next year and about 20% per year over the next 5 years. So that gives you an idea of where this company is going. It's great to see that growth. Right below the growth estimates, I'm putting a target PE of 45. That's based off of the historical PEs you see off to the left that we talked about earlier. So that target PE is my opinion. I looked at that board and I said, you know, you could probably pick this up at a 45 PE if the market wasn't running as hot as it is now. Now you see that black arrow there, and we have our target PE of 45 times today's EPS. That would put the price, guys, at $150.30. So about $140 below today's price that's trading. And then if you go to the bottom of the 150, you see $193.95 on my 2021 EPS projection. Okay, so any way you slice it, whether it's today or next year, I think it's suffice to say that SolarEdge is trading pretty hot right now. My 2 cents would certainly be to wait for some sort of correction before you jumped in, at least at this current price. All right, next stock on the board is Enphase Energy. And I forgot to mention with SolarEdge and Inphase, both of these companies make sort of optimization systems to transform the energy that comes in through the solar panels, turn it into electricity, help manage that electricity and get the most out of it before it powers your home. That's where both of these guys play. Looking at Enphase, you have a stock price today of $107.01. You see current EPS of $1.24, PE today of 85. The trailing PE in the yellow box there, as we scan across it, I came up with a target of 50 for that one. And again, that's just eyeballing the highs and lows and trying to be fair to this company. You look up to the top right and you can see we have a nice growth rate coming up. Next year could be plus 42%. And over the next 5 years, you have a 35% annual growth rate projected. So what does all that information mean? Well, if we took my target PE of 50, you rolled it into the current EPS of $1.24, that would put Enphase Energy's price today at $62. And then even as you roll in some of the growth data, the price would be $88.35 based on the 2021 EPS projection. So with Enphase not running quite as hot as SolarEdge, but it's certainly up there, and then there's definitely a premium being paid today. And even if you factor in healthy growth into 2021's EPS, you're still coming out paying more than folks have paid for this one in the past. Okay, next up is Sunrun. And Sunrun designs, sells, and maintains residential solar installations. So this is on the residential side. So you have a stock price of $72.89. And this one's going to be a little tricky because look off to the right. We have a current EPS of nothing, basically, minus a penny per share right now. So there's no real PE to speak of today. You see that Yahoo on the trailing PE in the yellow box, they had several iterations where they were profitable enough to post a PE. And even with those little radar blips of a trailing PE, you can see that the cost has run up quite a bit. And what we can do when we don't have a PE is look at price to sales, at least to get some measurement. And that's showing a relatively big markup. Even from just June 30th of 2020, price to sales jumped from 282 to 1082. So this one looks like it is getting sort of expensive. Going to the top right on the growth estimates, current year minus 190%. I don't know the story behind that, but they could have built a new factory or something like that. But next year's projected at 400%. But then the next 5 years, it's just not showing a ton of growth. I'm not exactly sure why, and I would certainly encourage you to read more about this company and their future plans. But the bottom line here is if you get an EPS projection for 2021 that would land at 57 cents, today's price would give you a PE of 127. I would sort of take that as better news than where we stand today. But just going through numbers on this one, I think if you're interested in investing in Sunrun, I would definitely spend a lot more time researching the long-term future plans for growth because there's more bad signals here than good signals. However, an investor who's super familiar with Sunrun may know that they have the next greatest product coming out or something like that. I did not see that in my research, which was surprising because this one stands close to the second or third highest market cap solar stock right now, but I'm struggling to see what some of that is based on. All right, next one on the board today is First Solar, and First Solar is actually a manufacturer. So they manufacture and sell solar modules, and then they also do commercial and sort of enterprise installs and systems. So First Solar is on the bigger kind of production side, and there's good and bad to being there. On the good side, you would figure that volume will be increasing certainly. The downside being that manufacturing typically has lower margins than like a retail sale. But this is one I think for me that resonated the most out of all of them. You look off to the right at the current EPS of 94 cents. PE today is 84.79. We go through the trailing PE historicals and you can see that not too bad at 84. This company's dipped in and out of profitability on certain quarters. Some of that is certainly due to the pandemic slowing down factory operations. But from my eyeball, I came to a target PE of 65. That would put the price at $61.10 today. And then if you factor in the growth rate above, which they're calling for about 25% growth rate each year over the next 5 years, if that growth rate materializes, then you're looking at a $74.70 price on 2021 EPS projections. So for solar, not too bad on valuation metrics, and this is definitely one that I'm going to be watching over the next few months. Certainly if there's a big correction in the market, I might have to consider this just to get a piece of the solar energy space. Okay, a couple that I just want to call out at the end here that I did not do the same research on because they are not US based companies. Jinko Solar currently has a market cap of $2.64 billion. This one's based in China. They do have United States operations and they are traded on NASDAQ. So that might be one for you to look at. Although as soon as I look at the chart on the right, I'm immediately intimidated by that price run up. So dig in, make sure you do your due diligence, but I just wanted to throw it out there in case you start investigating solar stocks. And the other one I think you should put on your research list is Canadian Solar. No surprise, they're based in Canada and they have about the same market cap as Jinko does, and you can see that the chart for Canadian Solar is somewhat similar to Jinko, although maybe not as high of a run-up. All right, guys, so we reviewed 4 solar stocks in detail, trying to come to the conclusion, are solar stocks overvalued right now here in October of 2020? So looking through the numbers, at least from my perspective, I would say that the prices are higher than I would care to start a new position in. I certainly agree that there's a lot of positive tailwinds coming through for solar, particularly if Democrats do overtake Washington. I think you'll see a lot of streamlining of green energy bills and perhaps even more tax breaks for investment. So I think all that stuff is good, but think about some of those growth rates that we saw. Yeah, there was one that was like 40%, but most of them were running in that 25 to 30% range on growth rate. So when you keep those types of growth rates in mind, which are good, right? But we're not inventing the wheel here, okay? This isn't like out of nowhere to 300% that you should sell your house in order to get in on them. I definitely think that there's great opportunity here, certainly for a 10-year investment. Just pick your spots though. I think the market will certainly have some volatility through the Christmas season at the bare minimum. So I would not be surprised if we get a correction of some kind, which may give you a better opportunity to jump in. All right, hope you guys enjoyed this look at solar stocks. Don't forget to pick up your free 15-minute stock analysis guide, link in the description. And of course, give me a like and subscribe if you enjoy this kind of content. We'll see you on the next video.